Alistair Scott.
Thank you, Mr Chair. Short call on part 3 of this bill, sir, referring to GST. GST, very good way of income tax, collecting tax for the government. Because it's broad-based, there are no exemptions, and it is a disincentive to consume. It taxes those who consume for goods and services. So it encourages, in other words, people to save and invest, which is, of course, why GST was increased from 12.5% to 15% at the time. And, of course, it enables the government to reduce direct taxes, which is essential if you want people to earn more, work harder and earn more and become more productive. So I just wonder, sir, what might happen once we see the universal benefit that's proposed from the opposition. I wonder where GST might go to if we all got paid $11,000 on the day. Mr Chair, I'd like to come to the bill which talks about the goods and services tax relating to cross-border services and intangibles. So there's with the refinement in the committee, to make it a little bit easier in regards to people who provide services on a collective basis. So I'm talking about insurance, where you might have a group of people in a country or around the world supplying insurance to a base of people in New Zealand. And prior to the Select Committee, that was going to be, every one of those suppliers would have had to register for GST and collect and pay GST. It's been a positive improvement in committee, sir, where those offshore people can use an agent and be represented by one entity, so enabling the tax to be collected by one agent and returned to the New Zealand government, Mr Chair. So that's a very positive improvement. The other positive improvement through the committee that I'd like to mention is around the choice of zero rating for those offshore companies that are dealing with New Zealand companies that are GST registered, obviously, in New Zealand. So that offshore company can automatically say we are to be zero rated and therefore no need to collect any tax, because there is no tax on a GST related business in New Zealand. So it only relates, we're only aiming to collect tax that would otherwise be collected or paid by consumers. So this is very much focused on the consumer, the New Zealand consumer that purchases these goods and services, or these intangible goods and services from offshore suppliers. Mr Speaker, the opposition talked about some discussion around tangible goods. It's not true that tangible goods are exempt. There is GST taxed and collected at the border. I think the opposition are referring to the threshold that applies to tangible goods. So there is discussion. Of course, if you hit a zero threshold or a very low threshold, that would be a loss-making venture for the government because of the transaction costs that are involved in that work. So, of course, there is work to be done on the tangibles, but that is not part of this bill. This bill focuses on the services and the intangibles, and that's only going to be growing as we purchase more and more Netflix, online films, data. More and more data is going to be travelling this way, sir, and this is a very simple way of collecting what is quite rightly GST that is paid by the New Zealand consumer and is currently not being collected, and as a result of this bill, it will be collected. This is a positive approach to GST legislation. Thank you.